Hey, what's up, AJT Jungle? We are on chapter 14 of the Trader's Mindset. And this is the second part of the art of taking a loss. Okay, it it is an art form. Um, it just there's no way to put it. Not everybody takes losses the same way, and everybody has to have their own way of dealing with it. So to me, it's kind of an art form. But we kind of left off with this last week. You know, pain is a great teacher if you would only listen to it. Okay, oftentimes pain just pisses us off. Okay, it just pisses us off. And we don't learn from it. We just get mad. And when we get mad or we get upset or we get angry, then things start to go south, and we make bad decisions. All right, and we also re-emphasize this, and I'm going to re-emphasize it again. Losses are a part of trading, and because of that, it takes a new way of thinking. It takes a new mindset in order to be a successful trader. Okay, it's all about eliminating mistakes and inverse thinking. Okay, and one thing that I've been saying lately, instead of risk reward, we're looking for reward for our risk. Okay, it's an inverse way of thinking. It's thinking differently than the way we thought growing up and all of that. All right. So instead of looking at ways to win, this didn't get. I didn't get this. I didn't fix this. Hold on. I'm sorry. I fixed it on the other presentation, but I didn't fix it on this. I did not fix it on this, so I need to fix this. Instead of looking at ways not to lose, you should study the most common ways to win. And then simply focus on enhancing them. Okay? Does that make sense now? I don't know why, but sometimes I do this backwards when I'm typing. I fixed it on the last one, but I didn't fix it on this one. Instead of looking at ways not to lose, you should study the most common ways to win. Okay, then simply focus on enhancing them. So remember, I talked about the beginner tennis player versus the professional or the advanced tennis player. The beginning tennis player, all they're thinking about are ways not to lose a point. But then as you get better and your skill gets a lot, better, then you start looking at ways to actually win the point versus ways not to lose it. And then you focus more on enhancing your skills that's going to help you win that point. Okay, does that make sense? That's the point that I'm trying to get off, to get over, not get over, but get across. So every loss does present a lesson. Okay, so when we take a loss, we do want to learn from it. Okay, even though, okay, we're gonna lose. We're focusing on winning. We're looking for ways to win. But then when we do take a loss, we have to look at it as a lesson. Okay, it's human nature to grade the loss based on what happened to the stock, after you got out, or, anything, whatever's crazy. But it's a natural part of the learning process. Does the quality of your loss depend on what the stock does after you get out? No, it doesn't. Okay, it doesn't matter. That's not the way you grade your trade. Okay? What you have to do is you determine whether your loss was a good loss or a bad loss. A bad loss, that's where you need to learn from it. That's where you need to figure out, what did I do wrong, or how did I end up not following my rules, or whatever. A good loss is the one where you actually did your job. You did everything correct, and the trade just didn't work out. That's a good loss. Okay, not that losses are good, but that's a good loss. And that's one that you shouldn't beat yourself up over. And unfortunately, most of us over the last couple weeks have beat ourselves up over good losses. We followed our rule, we followed our plan. Our rules of engagement were on point, but we still took losses. We still had, bad losses. But they're good losses because you did exactly what you're supposed to do. You did your job. Now let's pick up and move on. We know the market goes through these phases, these cycles. And we may go through a couple week cycle where we're not getting any follow through, or the stock's just chopping like you wouldn't believe before it actually makes a move. That's just the market that we're in. Now earnings are starting to come in. I'm looking for it to pick up. Now we may be delayed a week. It may be next week when things start to follow through. But whatever the case is, don't beat yourself up over a loss where you did everything right and according to plan and the trade just didn't work. All right. But we have one of the habits that we have to get into is learning from our bad losses. If we're making the same mistake over and over and over again, we've got to learn from it. We've got to learn how to deal with it, how to handle it. Because if we don't, then what's the point? All right, so this week we're going to pick up on getting in the habit of learning from losses. If you took a good loss, then focus on the setup and what went wrong with the triggers to learn for the next time. Let's say your loss, you did everything right and you've got 4 or 5 good losses in a row. Just double check the setup. See if the triggers were off. See if there's something that you can learn from for the next time. Okay, but don't get too beat up over it because it's a good loss. But, you never know. Like for me, I learned from my good losses that, hey, when the market gets like this, I need to take profit early and I need to take 2/3 off. You know, so I made adjustments based on learning from good losses. And then I'm able to eliminate some of those good losses when the market gets in this zone. Actually, ever since I made that adjustment years ago, I've never unadjusted taking 2/3 off my first target. I used to be half on my first and just take half of what I had left on the second. But the adjustment I made when the market got crazy and we didn't get good follow-throughs, I shortened my profit targets and I started taking 2/3 off so that I would lock in more profit. And I never switched back. Stop. I never switched back. Alright, so factor in the context, not just the pattern specific to the stock. For example, if you took a long trade on a 5-minute ORV, but the stock sold off after entry, then you can check the SPY or the Qs to see if the futures were selling off, or if something else is happening in the market that could be affecting what your trade. Now, I'm not saying make decisions or make snap judgments because you see that. But just know, okay, well, it's pulling back because the market's pulling back. Now, is there a reason? Did some bad news hit the market? Whatever. That's when you can start looking to see, well, what's causing this to do what it's doing. And that way, you can determine, hey, maybe I need to take this off. You can make an educated decision versus trying to guess what's going to happen. Alright, so if you took a bad loss, let's say you didn't stop out. Oh yeah, my profit taking, I take 2/3 off at the first target. And I haven't changed that. Believe it or not, I have not changed that since I started trading. Stop. I haven't since I've been trading. Yeah, and if it comes back to break even, I take it off. I'm not gonna let, once I take profit, I'm not gonna let the trade go back against me. I'm gonna lock in that profit that I've taken. Yeah, I don't take 50%. I used to take 50% off, but that's when we were getting these huge moves. That's when the getting was good, which was like 9 years ago. But right now I take off 2/3 at the first target. And yeah, there's a lot of trades now that I leave a lot of profit on because we take a lot of profit on. God damn it! Why? I'm sorry. But I can't turn my phone off. There we go. I'm sorry. They're just blowing my phone up. It's like because when I lose 1 hour or completely at my stop. Well, you probably aren't managing your risk. You're probably strangling your trades versus, and again, that you may have the mindset that you're trading not to lose versus trading to win. It typically, those are the results you get when you have that mindset. When you're trading not to lose, you're focused so hard on not losing that you miss the most common ways to win. And you're not focusing on that. So let's say you took a bad loss. Again, find the price level where you should have taken your stop. Or, if you didn't take your stop off, what clues were present at that time? I.e., price action. That's why reading price action and learning how to read it is so important. There was a trade yesterday. Let me see if I can find it and bring it up here. There was a trade yesterday. Hold on a second. This computer is driving me insane. Where the hell is it? Don't tell me I didn't Tesla Netflix. Oh man. I don't have the Microsoft trade from yesterday. God damn it, I forgot to copy it. Well, what I was going to point out is that if you're reading price action, it typically tells you when the price is going to change. It typically tells you when it's going to change, or when it's likely, when the winds are likely to change. So let me look at it. We'll look at this. Hold on. I'll just go back to tomorrow. I need to put my stop in place. Alright, so it was Microsoft yesterday, I believe. Alright, right here. Alright, so we got short right in here, right on this break. We got short in here. Okay, what does that candle tell you? What is that? What does that candle tell you? This is a reversal candle. This typically is telling you that we ran into some serious support down here, and we're that we're fighting, and it's likely to reverse course. Doesn't mean it's going to, but it is likely that it's going to reverse course. So if this candle gets confirmed and you haven't taken profit, that's where you should get out. And that's where I should have gotten out. But no, I let it go up and stop me out. So here's a case where, yeah, this was a good trade. It was a good loss because I stuck to my plan. However, what I can learn from that good loss and say, Ed, you weren't reading the price action, which I wasn't here watching it. But if I would have, read the price action, this would have confirmed to me that we were done. Now, would it make sense to let it retest red to green? Yeah, let it retest it. And when it could not sell off, and as soon as we aggressively took over this, it was time to get out. Price action here is telling you, don't wait for your stop. Go ahead and get the hell out. Okay, go ahead and take your profit and move on. Even if this rejects and it falls down and it gets to your target, so be it. This does not happen 7 times out of 10. Okay, it doesn't. So don't worry about it. Okay, don't even worry about it. But make sure that you're paying attention to different clues and different things that could help you, even with your entry. Even though you followed your plan and everything was straight, you can work on your entry. And maybe you can tweak your entry a little bit. You don't know that. But remember, whatever you do, you only do one thing at a time. And then you have to trade it for a while in order to get good data on it. You can't change it, trade 1 or 2 days, and then say, oh, it doesn't work. And then try something else. Because you're just going to get yourself further and further behind. But yeah, reading what you have shared about your trades, about your trading, your risk management, that's the reason why you're not making any money. That's 100% the reason why you're not making any money. You're trading not to lose versus trading to win. And it causes you, and I'm not saying that you're bad for doing that. That's the way traders are taught. That's the way I was taught when I first started trading. And if I didn't get taught by somebody that knew what the hell they were doing, I would probably still be in that trap. Okay, the way these people teach you now on the internet and a lot of chat rooms, it's logical if you use, if you think about it in the context of how you grew up. It's logical, right? But if you open your mind and look at it inversely, then you'll be able to understand and you'll be able to see, what I'm talking about. Whereas if you're trading not to lose, you're not going to make any money. But if you're trading to win, it's a big difference. Alright, I gave an example here. Let's say you chased a long entry at the high of the day, but the stock dropped sharply as soon as you bought. Okay, then identify the momentum indicator trigger that could have warned you of the collapse. Let's say it broke into the LRC. Alright, or whatever. Now, one thing we do know is that when a stock breaks high day, it's going to pull back. Okay, it's going to pull back. 100%. So, you know that. And you don't let that spook you out. Okay, that's one of the things that you should have somewhat perfected by now, is don't let these things spook you out. If you take a breakout and it pulls back, or a breakdown and it bounces, don't let it spook you out. That doesn't mean it's not working. That means the stock is doing exactly what it should be doing. Alright, so number one, you got to get that into your mind. And number two, if you trade a stock and it didn't work and it started to break out, then it quit, always go back and look. Even though it's a good loss, always go back and look to see if you missed anything. Because 9 times out of 10, I've missed a daily level somewhere. I missed a pivot somewhere. Or I forgot to check or update the LRC. I mean, it's always something that I might have missed that I wasn't thinking about at the time. Alright, but whatever it is, when you recognize something, implement that into your future plans. But you remember, you have to stick with it and you have to be consistent as you're doing it. Alright, so you got to diagnose the issue. That's where we get clinical. And, if we do mentor sessions, that's kind of what we're trying to get into. Is what is causing you to react the way you react. We've got to figure that out. If we don't figure that out, if you don't sit down and focus on that, guess what's going to happen? You're not going to make it. Okay, review the trade as if you're in a research lab. Diagnose where you should have taken the stop loss and what caused you to stray from that plan if you're guilty. Okay, and 9 times out of 10, it's emotions. It's a mental thing. Something clicked in your mind that caused you to make that decision. You want to do this both from a technical trading setup perspective, as if you were an algorithm, and from the emotional perspective, noting what made you go from being complacent to being stubborn. And then if you panic sold or got out in a panic, why did you do that? What triggered those emotions? That's going to be number one. What triggered those emotions? long thing. All right. And then you want to look at what key technical factors did you overlook, or ignore. You got to be brutally honest with yourself. Okay? You've got to be brutally honest. If you're not going to get better. If you're blaming it on everything other than yourself, you're not going to get better. And this is something that you can really add to your reflection and journal. When you're reflecting on your day, these are the things you should be thinking about. Not your win rate, or how many R's you got. That's that. I'm not going to even go there. You shouldn't even be focusing on that. You should be focusing on figuring out ways that you can win. Figuring out more ways that you can win. Assessing your trades in a way that's going to help you get better in the long run. And again, if you can't do that, that's what mentors are for. So here, I can't remember where I got this chart from, but this is a good chart that help you diagnose the bad losses. You got an algorithmic review of the trades, where step by step you list technical reasons, why things weren't done the way they were supposed to be. Some could be where you put your stop loss. Are you using the wrong indicators? I'm not a big fan of back testing. There was a time where back testing was really, really good. But the market changes so much, the dynamics change so much, that I don't know how well back testing helps. Now, I'm for practicing and using historical market data, market replay to practice, but not so much back test and get, where you got bad data. And wrong allocation is basically too much size. So then you've got the emotional review of trades. You want to jot down, and I've brought this up to you before, is whenever you take a loss or whenever something is bothering you, you want to list the emotions that you're feeling and what triggered those emotions. You really want to do that. That's really how it helps you determine, are you trading from a fear of missing out? Or are you just overly complacent? Or do you panic trade or revenge trade? All of these things stemming from emotions. And then once we understand, what emotion is triggering this, or emotions, then we can come up with a plan and address them. So, but once you've identified any issues with your strategy or process or your emotions, it is time to refine them. And again, I don't think most people can't do this on their own. Most people need help doing this and working through this. So for breakout or breakdown trades, determine the clues on the chart that would tell you that the potential breakout or breakdown has failed. Okay, not that it ran up real quick when you got in and then it sold off real fast. That's not a sign that it has failed. That is a sign that you ran into some profit taking. Okay, now what's the sign that's going to tell you that profit taking is turning into a reversal? Has turned into a reversal. That's what you want to look at. What's going to tell you that profit taking has turned into a reversal? So for pattern trades, if you're trading patterns, determine what the initial clues were that the pattern was not following through. Okay, what's going to tell you that your pattern is breaking up? You know, these are the things that you want to know. You know, if you're learning from somebody that's teaching you how to pattern trade, you know, you got to know. Yeah, that's typically what happens. Long wicks, when you get to, let's say when you break out a high day break, and the stock, as soon as it breaks the high day, it runs up like the dollar, and then it comes crashing back down. You know, the sellers kind of took over. The sellers got overwhelmed with the buyers, and then eventually the sellers caught up, pulled the price all the way back down. And it's going to leave a long wick. The higher the stock ran up before the pullback, you know, the taller the wick's going to be. Does that make sense? So you just don't know how many buying orders come in. Now sometimes there's so many buy orders coming in, it just overwhelms the people taking profit or people looking to short it at high day. Because you have some people that think it's a good idea to short stocks once they break high day, at the high day. You know, trying to trade opposite the market. So here's some questions you can ask yourself. What were the early signs? You know, what were the indicator signs? What was the earliest stop loss that could have been taken based on price action? See, we're not trying to stuff our trades. We're not trying to strangle them. We're looking at where's the best place to take a stop. You know, definitely you want to have your stop to where you give your trade enough room. But you should never sit there and wait for your stop to stop you out at max loss every day. I get caught in that sometimes. And it may be the fact that I don't want to be wrong or I don't want to take a loss. A lot of subconscious things can come in. But, excuse me, something we just have to be aware of. We have to be, you know, aware of that. So we're dealing with emotional and psychological issues. Identify where, again, this is a good way to kind of get your notes and everything's in order. Emotional and psychological issues are, you know, when you identify where you felt comfortably in control of the trade and when you started to feel an abundance of stress. What brought that stress on? Did you feel stressed out and anxious as soon as you took the trade? If so, that is a confidence issue. Also indicates a problem that you haven't accepted the risk yet. You may be fooling yourself and telling yourself that you accepted the risk. But that means you haven't accepted it. And it could be the fact that you've got too much money on the line. You took too many shares or something. But that's one way of, okay, when I got in the trade, I started stressing out, feeling anxious, things weren't working out. And that's where you got to figure out, well, what's causing this to happen? Why is this happening? And in the case where you don't stop out, you could say, well, you knew the trade was failing, you saw it. The price action is telling you that it's failing, but you wish that it would still play out. Even if you've lost key levels, you wish it would play out. And every time the stock looked to roll over, it bounced back up to lower highs, and just enough to make you complacent in the hopes that the next bounce will be the breakout. I know we all feel that. I felt it. I feel it every week sometimes, where I know the trade's not going to work. I know it's going to fail, but and it drops the level, and then I'm sitting here saying, it's going to come back. It's going to come back. And it never does. We humans are risk adverse. We don't like losses. And we'll do almost anything to avoid taking it. Now, am I right? Am I right? Y'all will do almost anything to avoid taking them. Losses are painful. And there's a strong need to seek out pleasure to avoid pain. Take a loss, drink a beer. Take a loss, smoke a cigarette. Take a loss, double shot of bourbon. You see what I'm getting at? So some of us, when we lose, we try to seek out pleasure by finding another winning trade. Forcing ourselves to try to find a winning trade so we don't have to go home with a loss. And we don't have to log out with a loss. Alright, so it's easier to avoid admitting a loss, and traders tend to figure out many ways of denying they're losing, such as holding on to a losing trade and hoping it'll turn around, saying, yeah, I'm down $5,000, but it's not technically a loss until I take it, until I close the trade. It's not technically moonshine. You're like, man, this ain't, I know it looks bad, but it's not a loss unless I take it. Unless I make it a loss. It's not a loss unless I make it a loss. It's not right. But in the end, you will trade more efficiently and profitably if you can take losses as quickly as possible. Move on and make a new trade. For example, in his book, The Disciplined Trader, Mark Douglas suggests that you close out losing trades immediately the instant you perceive that trade as a loser. And the best way to do this is to have a clearly defined trading plan where you predefine where you will enter and exit a trade. Or you predefine what's going to tell you that trade's not working. Is it a technical level? Or whatever. That's going to tell you that this trade is not working. So we need to have that. We've got to have that. That's got to be part of our plan. So once you have a clearly defined plan, you can execute the trade without hesitation. There's nothing to consider, weigh, or judge, or consequently nothing to tempt you to hesitate and be consumed with self-doubt. You'll be able to focus on monitoring the trade, and if you can follow your plan, you'll be able to trade effortlessly. All right. So the best way to take a loss is to anticipate. Don't be caught off guard. If you go into a trade expecting that it may be a loser, you won't be as bothered should the trade go against you or your expectations. But guess what? Why the hell would you take the trade if you're expecting it to be a loser? Why would, if I know I'm going to lose, I'm just not going to play. It doesn't make sense. So you can't go in expecting to be a loser. You go in expecting that the trade can go either way. Just say, it's got a better chance of winning than losing. There's a chance it could be a loser, but I'm not going in expecting that I'm going to lose. Okay, I'm going in expecting that I have a better chance of making money. Not that it's a guarantee, but that I have a better chance. Do you envision each trade before you take it? I don't envision what it's going to do. Let me qualify that. I envision where the final target's going to be, where I'm going to take profit and my final targets. But I try not to envision how it gets there. Like, whenever I get to the point where I expect the stock to go directly to my target, that's when I start to get in trouble. So I don't envision that. I envision the targets. I envision where the stop's going to be, but not how it's going to get there. Does that make sense? Okay, good. So, on the other hand, if you try to avoid considering the possibility, you'll become extremely frustrated when you're in a losing trade. So, you'll have unrealistic expectations, and we don't want that. I think Mark Douglas says the only expectation you should have is that something's going to happen. You just don't know what. That's what he said. But it's much more useful to accept the fact that losses are the norm rather than the exception. So if we go in saying it's common for a trade not to work out, it's okay if it doesn't work out. But we just can't go in expecting the trade not to work out. Because when we go in with that expectation, we might as well not trade at all. All right. It's also vital to define your potential losses before you enter a trade. So, and that's the risk that you're going to incur. How much are you willing to risk on this trade? You know, define your possible loss or risk in comparison to your possible reward or profit. I'm not talking about R's. Let's look at dollars. Dollars and cents. Dollars and cents. And it's also vital that you don't take losing personally. You don't take losing personally. You don't want to do that. When you start taking your trading personally, then you become more emotional, and then that's that. All right. Where is this? Okay, traders who put their self-esteem on the line with their money are especially vulnerable to strong, unpleasant moments when they lose. Okay, what I mean is, if you're gonna be hurt because you think you're wrong and you lose money, that's double trouble. Alright, double trouble. But if you take a more carefree approach and think it's not personal, it isn't a big deal in the end. You know, this is just one trade out of many that I'm going to take. Then you'll be able to accept the loss and take quick, decisive action. Yeah, to a certain extent, yeah, time does harden you. Your trading becomes calloused. You know how people that work outside or walk barefoot all the time, you build up calluses on your feet to protect you, or you build up calluses on your hands and your skin to protect you. Our trading becomes callous. And these things that would affect us in the past won't. And it allows us to do our job without pain and anguish. You know, that's what it's all about. Alright, so no one likes to lose while trading. But with the right mindset and the right plan, traders can choose to move forward after suffering a loss. In order to recover like a pro, traders need to do what pro traders do when they lose. You got to do it. Pro traders do not take their losses personally, since it's by their definition a part of everyday work. Instead, professionals stop trading if their losses become troubling, so that they can evaluate their strategy and move forward. Okay, that's what professional traders do. That's how they think. And that's how I want you guys to think. You know, don't take your losses personally. You know, look at them, learn from them. Accept the ones that should be accepted, and learn from the ones that shouldn't be accepted. You know, develop a process that's going to allow you to do that. Alright, so to sum this up, by predefining and accepting your losses, you're making yourself available to learn the best possible way to let your profits grow. Only problem is that the moment we take a couple of losses, we let that get to us and we forget to look over a series of trades. Does that sound familiar? Sounds familiar, doesn't it? All right. Any questions? Any questions?
Hello.
All right. So I'm going to pause it. I'm going to stop the recording here. And as